On behalf of Asian Markets, we welcome you all to the 1Q FY19 earnings conference call of Cera Sanitaryware Ltd. We have with us today Mr. Bharatbhai Modi, Strategic Advisor representing the company. I request Mr. Bharatbhai to take us through an overview of the quarterly results, and then we shall begin the Q&A session. Over to you, sir. Thank you.
Thank you so much, Kamlesh Bhai. This is Bharat Modi, Strategic Advisor to the company. Good morning and very warm greetings to all of you. Cera Management has a pleasure in welcoming all of you who have joined this call. Before I start, I would try to read out the disclaimer, which is as follows. Certain statements in this release concerning our future growth prospects are forward-looking statements within the meaning of applicable security laws and the regulations. These statements involve a number of risks and uncertainties beyond the control of the company that could actually cause material difference from those appearing in such forward-looking statements. The risk and uncertainties relating to these statements include, but are not limiting to risk and uncertainties regarding fluctuations in earnings, our ability to manage growth, intense competition, including those factors which may affect our cost advantages, wage increase, our ability to attract and retain highly skilled professionals, political instabilities, managerial limitations, legal restrictions of acquiring companies outside India, and unauthorized use of our intellectual property and general economic conditions affecting our industry. Cera Sanitaryware Ltd may, from time to time, make additional written and oral forward-looking statements, including our reports to the shareholders. The company does not undertake to update any forward-looking statement that may be made from time to time by and on behalf of the company as a sequel to or in continuation of these statements. The company also expects media to have an access to all or part of this release and the management's commentaries and the opinions thereon, based on which the media may wish to comment and or report on the same. Such comments and or reporting may be made only after taking due clearance and approval from the company's authorized personnel. Company does not take any responsibility for any interpretations, views, commentaries, reports which may be published or expressed by any media agency without prior authorization of company's authorized personnel. Now let me give you some glimpses of the performance that we have achieved during Q1 of FY 2018-19. I would like to share, despite the continued subdued market trend, we have done reasonably well on the top line for Q1, with a growth of 14.5% for the quarter on a year-to-year basis. But for the applicability of the India standard, more so with respect to the comparable figures net of GST and the excise duty, the growth would have been even more at 19.67% on a year-to-year basis for the first quarter compared to what 14.50% is now reported. Albeit, the bottom line has continued to remain under pressure, largely because of the product mix, the cost push, more on an energy cost, gas and power, the manpower cost, and a group of other expenses. This collectively has put a pressure on overall margin. The EBITDA margin for the Q1 remained about 37.22 crores compared to 35.58 crores of the same preceding period, the last quarter. Whereas the PAT for the quarter one remained at 20.2686 crores, as against 18.90 crores for the similar comparable period for the previous accounting year. Having said this, I would now like to invite the questions from the participants as we can begin the questions now.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Nihal Shah from ICICI Securities. Please go ahead.
Thank you, Bharatbhai, for taking my question. Sir, on the product, on the segment-wise growth, can you just elaborate on the growth for all the segments for the quarter?
Sure, Nihal, it would be a pleasure. First of all, I'll give you what is the breakup for the revenue. Then I'll also relate it to the growth. The total sanitary ware, we have done is about 56%, which includes allied product of 11%. We have a faucetware which is about 22%. We have tiles, including the exports, with about 18%, and the balance 4% is coming from the wellness range of a product. Now, when I take the segment-wise growth, in a sanitaryware, we have grown by 11.21%.
Okay.
On a faucet, we have grown 19.27%. On the tiles, we grew with 11.38% when I compare the same figures of Q1 of FY17-18.
Okay. So tiles growth, last couple of years we have been growing at pretty strong rate of almost like 25-30%. So exactly what has led to this lower quantum of growth in tiles in this quarter?
Well, if you really see the entire building material industry, have remained fairly subdued, and we were growing on a tiles largely because of our base was low. Now, as our base has also increased to a reasonable extent, the growth per se, looking to the economic conditions at a macro level, would always remain that, number one. Number two, we also have been trying to, reorganize our product mix in terms of going for a more of a premiumized product, and therefore, the premiumized product, the competition at the level, also has been one of those things where to push it at a price. And we never wanted to cut down a price, and we wanted to have a business. So we thought that, okay, let's have a very strong foothold in our product market first gradually when we want to premiumize that. And later on, we could always, get a momentum on a growth as well once we are stabilizing our presence in the premium market. So we took a stand in terms of strategies where, let the tiles also really go in a normal way, but then our main focus, which for a while was slightly more on a tiles, compared to what other two products like the sanitary and the faucets, these have been our bread and butter and a jam also. So we also have focused more on that where we could grow with 11% and 19%. So this is the way the strategies that management had decided that, okay, let's not really only focus on a tiles, though it's lower base. But then now, having come to a reasonable base, let's really distribute our efforts, attention in all the products. So this is why the tiles have remained. Not only that, in the tiles, we are also trying to probably come out with more premiumized product with a better presence across India in terms of our visibilities as well as displays. So these are all timings where we try to build our capabilities and the visibilities more.
Sir, also can you give us this these growth numbers excluding GST impact, so excluding the excise duty base, because this I think would come down to 14% growth, which is what excluding GST, which is what the reported number is.
Yeah, we had, if I compare both, let's say excise and GST both taken off, on a Q2Q basis, if I say we have grown by about 19.67%.
Right. And similarly, if you can give us growth for the segment-wise?
Well, that I'll have to work out because I don't have those ready-made figures, because I need to really work individually on those segments. Sure. But I can always come back to you, Nihal bhai, individually or wherever you want me to do that.
Sure. So, my last question would be on margins. Now, margins, obviously, we have seen significant pressure even compared to the sequential quarter, which was the March quarter. So, just want to understand as to our guidance for margins for the full year and any incremental steps are we taking in terms of hiking prices in faucets, sanitaryware, or anything, any lever we have for margins to move up from these levels going forward?
Well, certainly, yes, because, first of all, there are two ways we could do it. First, we have to look at it, the things which are under our control, the things which are not under our control. For example, the current market scenario, which is not under our control. And therefore, let's really, have a more of a tailwind, or at least let the headwind stop, first of all, on a market whenever you want to penetrate first. With a better price realization, this is one of the way where we could really improve our margins. Second, what is under our control is the cost cutting. Wherever we feel that, okay, there are possibilities about controlling costs, getting far more better recoveries on the product that we have, and using our, all capital allocations in a more efficient way. That's been a focused area as of now. And in a time to come moment, we have a slight improvements in terms of the macroeconomics in the building material, more on a new construction. We are capable, a lot of people with a lot of brand presence, number one, the distribution reach that we have, we will be able to bounce back on this. So currently, we want to really continue with the market share that we have. We do not want to lose out on a market share. We would like to sustain our market share and also increase our market share further wherever possibilities are. And then we would bounce back on a margin. So as of now, margin is definitely under pressure, and we admit what you have said is yes. So when times to come, the endeavors would be that, okay, how we really improvise our margin is one of the most focused area from the management perspectives.
But sir, can you give a ballpark number in terms of margins you're looking at for the current year?
Neilbhai, it would be too early to really say so what kind of a margin that we would be doing it, because generally what happens, in an industry like us, the first quarter is always subdued.
You're right.
And therefore, unless, you really come to a second quarter and any guidance for a margin, even if I give, and even if you take from me, both of us will be wrong. So sure. I might probably suggest you that, okay, you could come out with the same questions, maybe when we have a next call after the quarter two.
Sure. I think
at that time it will be in a more definite position to give you a better guidance. And generally, I might say, let's really not really be very bullish about this kind of a thing, but then continuing and improvising the efforts, there are always scope for improvements, which we have been doing it.
Sure, sir.
Let 2 quarters go on this. Let the rain god also, the economy of this country is more agro-based, and therefore, let the rain come, and then we'll be in a better position.
Great, sir. I think, sir. Sir, lastly, just my last question, the impact on the trucker strike for you in the last month, if you can just elaborate.
Well, it was there. We lost a business, we lost a dispatch. It's not a business, and because of the dispatches, they were delayed, but then we could recoup it up. For a while, because what we have, a lot of trucks have been under our control in terms of how we manage the distribution channel. So we were, compared to the other competitions, we were slightly less affected of that. But despite this, yes, this did affect us. But then we were able to recoup for a while, yes.
Fine, sir. Thank you, Bharat bhai. Thank you so much.
Pleasure. Thank you, Nalbhai.
Thank you. The next question is from the line of Sonia Lalwani from Punartha Investments. Please go ahead.
Congratulations, sir. I have 2 questions. First is on the industry part. So how do you see the industry in the next 1 or 2 years, and what part of your sales could be directly proportional to the housing? And that is again divided into commercial and residential side. So, and also, what do you think, which segment of your company should grow or more with respect to housing, if there is a housing demand from commercial and residential side? So this is the first question.
Well, Sonia, thank you for your questions. I might try to analyze the whole situation in a macro level like this. The industry that we generally are servicing is basically the building material and the building and the construction. And therefore, largely we depend upon the construction projects which come up. There have been no very solid, reliable data available for what is the replacement market. It's an immense market, but there have been a lot of headwinds in terms of execution part of it, and therefore in this country, the trouble for execution, even if you want to renovate a bathroom, you have resources, you like to do it, but how many times in the last 5 years, if I ask you a question, did you or could you renovate a bathroom, then, despite your wishes, you are not able to do it. So there is a market which exists, but then, okay, there is not been able to be bringing efforts to the company, and therefore we largely depend on the new construction, which has been subdued. But taking to the kind of a product line that we have, we are in a sanitary ware which hardly has an option. If you really see Century, there are no option to the ceramic sanitary wares. So we are in a right product line as such. You need a faucet also, to really transport and convey the water from pipeline to that, and therefore the kind of a product that we are into it. We have the best of the product which have probably no replacement as such in terms of any options. Well, within the product category, there could be many designs, many options that could always have, but faucet per se, you do not have an option to replace that part. आपको नल चाहिए ही चाहिए, इसके अलावा आपके पास कोई option है नहीं. Similarly, on a flooring also, the vitrified tiles is one of the most economical options that you have compared to any other substrates. And per capita consumption of the tiles in this country is far more lower than the neighboring countries. So at a macro level, we feel that, yes, we are in the right product line which has a life cycle of at least in a foreseeable future of next 10 years. Or 15 years for that matter, is unaffected. Coming to what is now happening is a market itself is subdued for various reasons. There has been a RERA which has come into it. There have been a demonetization effect. There have been a lot of things which GST has also come into the fray in terms of regulatory bodies. So all this, a lot of people who have been the new starters of unless there is a need-based, the overall market for the housing or even for that matter commercial is subdued. Because there have been, we have witnessed that this is very cyclical business. If you like last 25 years or even 28 years, right from 1992, 93, every fifth or a seventh year, there is a slump. And then again for a couple of years, it will, you will have a subdued atmosphere and again it will start pick up. Again it will have a slump and again it would pick up. So there is one cycle. Probably we all hope that we are at the fag end of the trade cycle and, anytime maybe in about 6 months, a year down the line, we should be able to revive this business. And once this is done, we are capable, a lot of people, in terms of our distribution reach, in terms of our product mix, in terms of our brand presence. So all the three should really take us in terms of a forefront runner, and we should be able to bounce back. So it's a question about weathering out a rough time or a headwind that currently every construction or a building material industry is facing. But amongst them, Cera per se has internal strengths in terms of we being a debt-free company, number one. We have a tremendous brand power, and we have a vision where we can take the brand from where we are. We have also been revamping our product mix to fit to the marketplace and the preference in terms of premiumizations. So a lot of strategies are being done where we would stand by and weather out this. So it's a question of time.
Yeah. Okay. So, sir, you see all the three segments of your company growing at a good pace coming like 6 months or 1 year down the line?
Well, we hope so, yes. It has to pick up because, even in a subdued market like this, we have grown more than 15%, which is a testimony if you compare with our peers and if you compare with any other building material. Well, margins, of course, have remained in pressure, but then that's what is always in a business. You always come across this kind of a thing.
Okay. The second question was on the other expenses breakup. So if you can just provide me the breakup of other expenses for this quarter.
Well, other expenses, largely is comprising of so many expenses, which is a group of about 28 expenses, but then your concern I can appreciate is where the other expenses has gone up. It's largely, one is because of the freight and forwarding expenses, which as earlier we used to have a revenue, which was net of freight and forwarding expenses. Now, as per the Ind AS, we have to include freight and forwarding in our revenue, and now we have to debit that in our other expenses. So these are largely contributed towards the rise in the expenses.
Okay.
Second, there have been some push market, and therefore, dealers also who generally we don't treat them as a buy-selling arrangement, but we always handle them as our channel partners. So in a difficult market like this, we also support them. So there is some sort of an extra incentive that we need to give them. Sometimes, depending upon a product category on a territory, not as a general rule. So that also is accounted. Publicity expenses also has gone up a little bit of it. So these are the major contributory factors. Three of them, as I narrated, has really taken the other expenses with about 300 plus basis point on a rise.
Okay. Also, sir, the adjustment that you told for freight and forwarding charges has been adjusted like for quarter on quarter as well as for the year-on-year numbers.
Yes, after Ind AS, now it has to be debited below the line. Earlier we used to knock it off. It's not our revenue. That's the way we used to consider, and therefore it was not appearing. Now you add up to the revenue, number one, and you claim a reduction as an expenditure.
Okay.
So that's a new head which immediately came up, when you compare pre-Ind AS and post-Ind AS.
Okay. So, sir, could you just give me the number for freight and forwarding charges that has been debited, if you have it readily available?
Well, I wouldn't have those ready figures out of month, but you could always reach me out separately and I can give you that part.
Okay. And so next question is, how has the power and fuel cost increased? Has that increased,
yes,
YOY basis?
That's also an increase on a year-to-year basis because both, the gas and the power cost both has been on an increase. On a power front, we have also, though we are almost self-dependent on power generations, but we are dependent on an alternative energy generations like a windmill, and we are at the mercy of a god many times in terms of the velocity of the wind. So this time what happened in the last 3 months, the velocity of the wind has remained very subdued, and it was not able to generate as much as that you would have liked that to perform. On the gas front, when I said, there has been an average cost for a gas that we had about 22 rupees and 50 paisa per cubic meter, which used to be earlier 17.56%. There's about 28% rise in our gas cost as compared to what we used to do it.
Okay,
so gas cost also has, but then, in terms of the cost of a gas as a percentage to the sales is not that material. Is less than, 1.5% or less than 1.35%. And therefore, the impact in terms of absolute amount is larger, but in terms of percentage is not there. But despite this, yes, it's one of the major contributory factors which has taken our cost push.
Okay. So could you share the industry figures for faucet and then sanitary ware and tiles, if you have that?
What kind of an industry figure you want? You want a top line, bottom line, or a cost? What is it that you are asking?
The revenue figures, top line.
Well, today the call is for Cera, and therefore the better let us stick to what you have been asking for, Cera, because those comparisons many times, even if I try to make, I may be wrong because I may not have the right data with me as of now.
Okay.
But in general, what we gather from the market and our salespeople, they report to us that everybody has been in the same boat. Probably we are one of those who have done better than compared to the peers.
Okay. So for tiles, hello?
Yeah, I'm listening to you. Tell me.
Yeah, so for the tiles, I just wanted to ask you, how many JVs do we have for tiles business?
We have as of now only one JV which is operational. The second JV, our board has very recently, yesterday, has approved, and they will be taking an exposure of 26%. The total cost of the project is estimated around 40 crores, and our exposure in that JV will be anything between 8 to 10 crores.
Oh, okay. That's helpful. Thank you. Thank you so much.
Thank you.
Thank you. Next question is from the line of Ritesh Shah from Investec Capital. Please go ahead.
Hi, Bharat. Thanks for the opportunity. So my first question is on the working capital, sir. Any specific trends that you would like to highlight on the receivable days?
Well, if you really see, our receivable days have come down. If you have those figures ready with you, for the whole of the year in 17-18, we had a receivable days of 70 days plus. And if for this quarter, we have hardly about 55 days. And if I take Q1 comparisons with the previous accounting, we had about 62 days earlier. So they're also been pretty tight on the receivables. And let me be very honest about it. The growth that we have projected, or we achieved, why projected, I would say, whatever that we have achieved would have been far more than what we have reported. Had we been little liberal on our receivables, but we have been very strict on this. Unless, you have paid within 50 days or 55 or 60 days, we wouldn't bill you further. So there have been very tight control on the working capital. Put together with inventory, we hardly have 100 days.
Okay. That helps. So second is, how do you see the impact of e-way bill actually going forward? So how do you see it from a tax compliance point of view? And when do we see actually organized sector getting back in the limelight?
Look, it's one of the best reforms that the current government has been able to bring out. There are two things, they are trying to do is one is the transparency, another is the traceability. These two T's, the traceability and the transparency which the government is aiming at, can only be achieved when you book every business through your books. Now, unfortunately, the building material industry had a major share coming from unorganized sectors. And when we call unorganized sectors, they largely had a lot of business which was not reflected in the books. Now with e-way bill, they have no choice but to get it reflected. But then, still, there are a lot of brains who probably try to flout the law, which is not unknown in this country. They try to do that kind of a thing. But question is, the execution machinery from government has also been very strict this time. And therefore, sooner or later, these will be 100% coming on a books. But yes, you always have black sheep in any business, so there could be 10%, 15%. I don't know what kind of a people would be there. Even if I give these figures, it will be only a hunch figure. So people try to do that, but then you don't do business only for those kind of keeping those people in mind. You always do a business with looking your eyes forward. So in a time to come, we feel that e-way bill will be a lot of things which will bring to the books, and therefore the difference currently that people enjoy in pricing will get much narrowed down. So organized actor in a time to come should benefit. That is what is the premise.
Correct. Sir, just to put this the other way around, how do you see the tax compliance so far, specifically in the sanitary ware segment? Like what
I can only tell you what Cera has been able to do it. I wouldn't know what is happening in unorganized sectors at the Morbi hub. But reportedly, because I have no authenticated figures, even if I tell you about this, I would be wrong, and you would be a wrong listener to me. But reportedly, there have been efforts to flout that. But that's not very workable and tenable in a long run. That's what we all feel. So in bits and pieces, this kind of a news do come for a quarter. And we wait for the best time that, okay, now this is getting streamlined day by day. So there have been some progressive manufacturers at Morbi who also are trying to fall in line, trying to graduate them into a more organized way of working. But then you always have a smaller business, so, he's a part of the business. But then what it used to be earlier and what is now, that is definitely on an improvement.
Okay, and that helps. And sir, last question on the gas prices. Sir, how should we look at it in the short term, given the trends that we are looking at?
Crude has been on a rise. We always have been listening news about $75, maybe to $90, and may even cross that also. So let us hope for the best about it, that, okay, the crude is kept under a check and we do not have to shell out more on an inflationary cost on that part. But one thing is that, sanitary ware does not have that big impact because of the gas cost compared to what the tiles industry would have. The percentage of a cost, the percentage of the sales is less than 1.5% of the gas as compared to more than 20% in a tiles. Faucet does not require any gas, number one. And therefore, the kind of a product mix that we have is only tiles and sanitary ware which are affected. Tiles anyway, we are not manufacturing under Cera. We are only outsourcing. Even if it is a JV, they're outsourced partners to us. The question here would be that, okay, our cost to purchase, our costs would go on because of the gas price, but that's across industry. Cera is not in isolation.
Correct.
Here, the strong brand presence, the distribution reach, and a credibility of the promoters, the credibility of the manufacturers would come into the fray, and the inner strength would come into the fray to sustain those kind of whatever that headwind that you come across. So it's a time. But then, yes, gas price is on a rise. Is a cause of a concern for tiles industry, yes.
Correct. Sir, can you quantify how much is it, is it like 8-9 rupees, how much is it, and if you can help with some details on the...
Well, it will be too personal as far, even if I do it, it will be Bharat Modi who will be doing it, and I'm not here to give my opinion. I'm only giving you what Cera feels here. So, I would not try to color with my likes and dislikes in this conference. Yes, the general trend is on a rise, and you could say about 10%, 5%, 7%, 10%, and all, the research analysts, they know much better than what I probably will be able to contribute in a conference like this. And even if it is, it's my personal view, so I would not be able to, I'm not allowed to really contribute my personal views. You could excuse me on this.
No problem. That helps a lot, sir. Thank you so much.
Thank you very much.
Thank you. The next question is from the line of Arun Baid from Bank of Baroda Capital Markets. Please go ahead.
Hi, Bharat Bhai. Just wanted to know, this new JV which we are doing in Morbi, what is the capacity there?
Well, we'll have initially, close to about 8 to 10,000 square meters per day. Now, this is the way we look forward to it. And then gradually, we would increase it as we would be needing it more.
Okay. And so, generally, from the industry perspective, is this the kind of capacity you require, 8 to 10,000 square meters per day, normally for a plant to operate?
You see, generally what would happen when you start, these people are anyway in the business. Now, we have an outsourcing from them also, and we've been very happy with the quality that they are. Now, we have two choices. Either we make an investment in their existing things, number one. But then, we were not pretty sure about their corporate governance in what they've been doing. And therefore, we thought that, okay, let's niche out a new JV where, they also would invest and we also would be investing, starting a new one. So to begin with, when we talk about, we will be only, that's an economic model, the economic plant capacity is about 8 to 10,000 square meters you could begin with.
Okay. And then,
you can always fall back for any shortfall that you have by outsourcing further from the known sources.
True. So, and typically this 8 to 10,000 square meters per day can, what is the asset turn we can look at broadly, if you're investing 40 crores in this JV?
You can look about 1.5 times. Ideally, if you go for a product mix which will be more of a premium, maybe 1.7 times, 1.8 times.
So 1.5 to 1.8x is the broad number, right, sir?
Generally, yes.
Okay. And so just one thing was, in the last call you had mentioned that, we are going to look at something like, 150 basis margin expansion in this whole year. Given what you have seen in Q1, are we still on track of it, or, how do you look at that?
Well, honestly, I feel that, this Herculean task as of now, and it's very challenging. We were hoping that the market should improve and there must be a demand opening up, which unfortunately has not come up to a stage where we would experience that part. So my comments or my reaction to the margin expansion was far largely related to that the business should pick up. Now, moment the business picks up, yes, we are a capable lot of people where we can bounce back even more than 150% margin also. Because we have proven that, if you see about 4 quarters back, we had a hefty margin of about 17% plus, 16.5%, 17%. But I might even make a slight exposure here, from the perspective of only relying on an EBITDA margin, that would be slightly out of context. Number one, because, we have almost now coming to 45% in-house manufacturing and 55% of the business that we really do is outsourced.
Right.
And when you talk about an EBITDA margin, which is more relevant to what we manufacture, as you have a proportion which is more of an outsourcing, EBITDA margin would be on a decline. So, you need to relate it to the business composition that we are talking about, number one. And number two, a more relevant parameter for judging a capital efficiency would be a return on equity or a return on capital employed rather than going on an EBITDA margin. Hello?
So that was from the line of Arun Baid.
Yeah.
Hi.
Hello? Hello?
There seems to be some transfer of calls from the line of Arun Baid. We take the next question from the line of Shrenik Bachawat from JM Financial. Please go ahead.
Yeah, hi, sir. This is Achal Luhade here. Thank you.
Hi, Achal. How are you?
I'm very well, sir. Thank you. Sir, quick questions. One is
excuse me, this is the operator. Mr. Luhade, may we request you to use the handset, please?
Yeah, is it better now?
Yes, thank you.
Okay, apologies, sir. I wanted to check what is the absolute power and fuel cost number. Would we have that for the quarter?
Well, absolute numbers I would not have readily available, but I can always be approached separately for your absolute requirements.
Sure. No, why I'm asking because if I look at the fourth quarter, probably it was about 11 or 10.7 crores or so, and if I assume the similar number given the mix, I'm looking at a 27% jump in the other expenses. So part of that is already answered in terms of freight forwarding and the incentives and the publicity. But I was just curious, particularly on the power and fuel cost. Number two...
But as I said, power and fuel has gone up at least, this quarter itself, if you compare on a Q-to-Q basis.
Okay.
The gas cost has gone up at least, as a percentage to sale by at least about 0.80%. That means little less than 1%.
Okay.
So that's a great impact on that in terms of our cost.
Understood.
And another thing is, what's happening, we have, one is an administered price mechanism where we get from GAIL. We have a sanction load of about 33,000 cubic meters per day, but unfortunately we do not get that.
we hardly get about 12 to 14,000 cubic meter per day, which is hardly 40% of our requirement which settles. The balance 60% we have to rely on the international price and therefore the Sabarmati gas. Earlier, this composition was reversed. We had administered price was 60% and 40% was from Sabarmati.
Right, okay.
So there are two ways, we are getting hurt. One is the composition within the gas consumption has also been reversed more in favor of the international pricing mechanism rather than the administered one.
Right.
And second, the price of the gas also has gone up. So both the ways we are taking a hit on this.
And top of that, we also have the, so power and fuel for tiles will be part of the raw material cost itself.
This will be. Power, we are not worried about it because, the moment, the velocity increases, we are almost 95% self-sufficient on our power generations. We would not have much botherations. Not only that, we have added also another 1 megawatt of a solar rooftop. We had earlier about 1 megawatt, we added one more, so we have now 2 megawatt solar generations.
Right.
So these also is coming to our rescue in terms of helping that, okay, we have most minimum cost on a power generations, which is self-sufficiency.
Got it. Secondly, if I look at the gross margin, I know it may not be right to look at gross margin, but I was just curious to understand this. The product mix, the revenue mix in terms of sanitary faucet tiles is broadly similar what it was in fourth quarter, the immediately previous quarter. While our gross margin was 51.8, this quarter it is 54.1, yet our EBITDA margins are lower. So is it to do with the product mix, like the more of in-house this time as compared to fourth quarter? Or how do we understand this aspect?
No, you need to understand from the kind of a product mix that we have within the category. We had a very large, pretty long time we have been tagged as a value for money product. And gradually, we have been trying to increase our foothold into the premiumization. So as you have a more of a premiumized product, we very recently came out with Senator as a new brand.
Right.
That we could take on a competition from any global player, number one, or any premium product that any other competition is offering in a similar category or a range. And therefore, more of those kind of a product when it comes into Sanitaryware, margins also would be better. And the same analogy and the strategy that we would be extending in the faucet as well as we will be doing it in a tiles in a time to come. So which is also on absolutely on a drawing board, and we are trying to do that part. So in the next 12 months from now, you would see that, okay, the entire approach that we have is more on a premiumized product. Despite that, we will have a very strong foothold where we are in a value for money product. So without losing our fit, which is firmly fitted and that, we'll be taking a larger leap on that. So that would improvise our margin, and this is the answer as such. How do I really improvise our margin? You see, there are certain costs which you cannot ignore, but then you need to really generate a revenue where you are able to do a more premium product. So this has been strategizing this way in terms of revamping the entire product, the entire efforts of the salespeople, the focus, the way they have to sell the product.
Right.
So this is what is being done now at a core committee level.
Got it. So in terms of the margins, I'm again hopping on the same question actually, sir. For the current year, is it fair to say that we'll be able to maintain what we had reported in FY18 given the product?
Well, I would very conservatively and very candidly put it, let's really stick to what we have said that, and if I perform better, you would always love me, right?
Right.
But if I fall back on what I'm saying, you would start hating me, which I don't want you to do that.
We would never hate.
So let's accept where we are in the reality is, let's do that, So even in next call, if I perform better, I'm sure Achad would love to hear me.
Okay. In terms of the capex, how are we looking at for?
We have more than about 100 crores capex this time, which is sort of for the whole of the year that we have planned. The board has approved that plan.
Right. So that includes this JV related
everything. We have a PVC system JV also. Within that, we have a capex for a display in the Ahmedabad office. We have, we are going to a larger corporate office now, post second quarter. And then we'll have two JVs we are envisaging this year. One, we have already announced one more. We are trying to scout for that for a right partner. This is going to take about 17 crores. We have a staff colony that we have to build for them because we are adding a lot of people at the factory also, and because we are raising the capacities and capabilities both. So we have about 23 crores. We have earmarked for that. And we have normal maintenance capex is about 20 crores. Plus we have a display centers and, we have studios that we have is about 7.5 crores. All put together, I'm saying a figure about 100 crores, 105 crores.
And
so far, so incurred for the first quarter, we are almost reaching to about 30 crores figures.
Understood. And with respect to you do talk about the mix in terms of the upper premium, those categories. Would you be able to help us with that as well, sir?
Well, yes, certainly. We still have about 40% market, from what I said, is a mass or a very popular market. And then there is an upper market which is about another 45%. And above that, there's a premium range that we have. So that 45% we again have broken up into upper and upper lower. Earlier it used to be both contributing equally, let's say upper and upper lower. 22.5, 22.5 kind of a thing. But now gradually the shift has been more towards upper. Therefore, the upper lower category is slightly getting narrowed down to about 20%, 19%. And the loss here is gained with the upper. Whereas on a premium market, we still maintain about 14, 15%.
Got it. And would this be the similar for the industry as well, or it would be different at the industry level?
Well, for an industry that could, because everybody has a different positioning, Some people probably they feel they are in a premium segment and therefore the positioning could be reversed than what we are talking. We always compare ourselves, as we are Marutis, we are neither a Toyota nor Honda, leave aside Mercedes and the BMWs. And we focus more on a larger horizontal base. Therefore, we are able to sell larger number of units compared to per piece price, probably compared to the premium segment players will be lower. But then, we have a better margin, even if they sell a premium, but our margins and our balance sheets, is more stronger than anybody else.
Correct.
It is not really what matters that, whether I'm selling BMW or I'm selling Mercedes, what I'm selling has to sell at a margin that we want that and must really give a reasonable return on our investments as well as return on equity from a shareholder's perspective.
Right. For any new investment, do we have any particular number in mind that this is our minimum required return to initiate the capex, whether it is JV or own capex?
Well, generally we would always say that the capex has to, incremental revenue. It has to either bring in, number one, or it has to raise our brand perceptions, or it has to really help us in cutting cost, or it has to strengthen our manpower.
Right.
So, you need to really build a business. You need to really take care of everything. You cannot really sit every time tight on a less margin. It must contribute because, when you are in a business, you need to take a span of 3 to 5 years. We are not a traders and therefore, we start counting that, yes, yesterday we invested in a working capital, it must give a return. But, you are in a business of manufacturing and in industry, so give and take about 3 to 5 years span. But generally, we will invest, where we have a reasonable payback period of about 3.5 years, less than that.
Got it. And this particular new JV about tiles, what tile we are looking at? Is it PVT, GVT, or ceramics? And within ceramic, what kind?
You see, it will be PVT and GVT and more. The second that we are scouting is on a wall tiles, ceramic wall tiles.
Okay, wall tiles.
Because that the value addition for the wall tiles are slightly more because you are able to spin out a far more number of designs which are in a smaller quantity you can offer them. And therefore the margins are also higher there. So this is what we would try to do that. Currently we are outsourcing, but we need somebody under our control where, we could dictate a product mix and we can plan a production so to suit our sales plans.
Understood. Sir, can you help us with the capacity utilization for respective segment?
Sanitary, we are almost 98, 99%, and whatever the 1% is only because of the maintenance that we need to keep a plant closed, but we are almost fully using our capacity on sanitary ware. We, in fact, are falling short of capacities. So we outsource domestically as well as we outsource from China. On a faucet, on an increased capacity, we are using about 70 to 75%.
Okay.
And on a tiles, we have only one JV as of now, which is operational, where we have a Ranjani tiles. So we are almost about 78%, 75% plus utilization there.
And the outsourcing proportion broadly, has it remained same, like 50% in sanitary faucet and 100% tile? Would that be fair?
Yes, exactly same, yes.
Understood. And just last question, sir. In terms of the growth, probably you did address partially, but I'm just curious to know, for the first quarter, we have reported close to 20% on like-to-like basis. Do you expect that to kind of sustain?
Well, our chairman publicly has, Chairman Shri Vikram Samani has publicly made a statement, that we will be able to give at least a growth of more than 15 to 18%. And we stand by what our chairman has committed, yes.
Understood. This is really helpful, sir. Thank you so much. I'll come back in the queue. Thank you.
Pleasure, Richard.
Thank you. The next question is from the line of Ayush Sharma from Investec Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, is it possible to have a segregation of the revenue mix in terms of captive and outsourced?
Well, when you talk about, the faucetware, we have faucetware which is outsourced is close to about 52%, and 48% is in-house manufacturing. Tiles is 100% outsourced. And when you talk about the sanitary ware, give me a moment, I'll come back to you on this. We have about 50-50 there.
Sure, sir. Sir, and on the capacity utilization side, just to continue what was asked previously, so the 52% outsourced on the faucetware side, what was the utilization level for this?
When we outsource, there is no utilization. We can have utilization related to what we manufacture in-house. And when I say outsource, it also includes some of the critical components which we outsource them. The body we may be making, and we may be, outsourcing some of the components in the faucet which goes into an assembly, and sometimes we completely manufacture the entire range of a product. Plus, in a faucet, we would be outsourcing the complete product also, because it happens sometimes at an entry level where you have a fierce competition. The cost that, at that entry level sometimes becomes prohibitive if we start manufacturing that. And therefore, we outsource, and at the moment, the brand Cera gets attached to that, our realizations and our margin do not really get affected to that extent, and therefore, it makes sense to outsource a low range of a product. And similarly, same analogy even goes in sanitary ware as well.
Sure, sir. So I was just coming from the JV point of view. So like for tiles, the utilization was mentioned at 75%. 75 to
78%, yes. That is a JV.
Yeah. So that is what I meant in outsource. So under faucet, there's no JV as such.
No, there is no JV. We either outsource or we completely manufacture ourselves.
Okay. And on the sanitary ware side, sir?
There is no JV. Again, we either manufacture or we outsource.
Okay.
And when I mean outsource, it is not a trading. Let me be very honest about it. Whenever we outsource, it comes from the outsourcing partner with our own logo of Cera. It comes under a packing that we really want them to do it in a packed way. And whenever we outsource domestically, our technical team also offers a lot of technical help in terms of process parameters, in terms of mold making, and it's like a hand-holding as a partner. So it's not that, okay, I'm buying and selling that the way you would treat as an outsourcing. Outsourcing has a different connotation that I might add on to that part.
Okay. Sure, sir. Thank you.
Thank you. The next question is from the line of Sriram R. from Sundaram Mutual Fund. Please go ahead.
So thank you for the opportunity. Sir,
excuse me, this is the operator. Sir, may we request you to use the handset, please? We can't hear you well.
Yeah, so if I look at your, the sanitary ware, faucet and tiles, I mean, what will be the, EBITDA margins for this quarter and vis-a-vis the last year, sir, if you can?
Well, you could excuse me, we do not share product-wise margins. Okay. This is not the management policy, we do not share that. You could excuse me on this.
But just want to know how is it moved at least in terms of tiles and...
Well, the industry has, if you see, even if I don't share my figure, the industry is very open on that part. That sanitary ware has the highest EBITDA.
Yeah.
Then the faucet and then the tiles. Now, this is the industry norms.
Yeah, no, I just want to understand.
And the same norms is applicable to us as well.
Yeah, so if you could give some color on how's the movement of margin been on that side, sir. I mean, if the movement is largely in line with the overall this thing, or you see some more impact in tiles and lesser impact in sanitary ware?
Well, if you really see, as far as sanitary ware is concerned, our margins are reasonably good and we have been maintaining that part. And with the premiumization, that is on an increase as well, number one. And the same analogy goes even for the faucets as well. But the faucet, the premiumization process is compared to the sanitary ware is little slower. And the tiles, when you really say, we had entered the market as a new beginner. We were slightly a late entrant into the entire market, and we started with an economic range of a soluble salt. And gradually, when we picked it up, we have now, for last about a year, we have been now into GVT as well as PBT, that we are trying to revamp our complete technology in our JV partner, Anjani Tiles also. It was completely a soluble salt, and now we are also trying to infuse, to upgrade the technology. And therefore, it will now be capable of manufacturing GVT and PBT, and therefore margin now would improve further. And as far as outsourcing is concerned, we are not bothered about what margin is, only an add-on that whatever that we get. And the most important parameter that would be, that how many times we are able to turn over a capital in a year, even if it is a single digit, lower of the single digit, even if I'm able to turn out, let's say, 4 times in a year, you still come out with an hefty margin on this.
Yeah, sir, coming to the outsourcing part, how is the agreement structured as far as pricing is concerned? Is it a fixed margin kind of thing or...
No, it's a rate contract, It's generally a rate contract. At these rates, we'll be buying, you'll be supplying us. And there are certain cost parameters based on which the rate contract is made. See, if there are abnormal changes in those kind of parameters, yes, the revision is always being asked. And then it depends upon, are we able to pass on whatever the price increase that we need to bear? Can we pass it on to the distribution channel and the end user? Now, that would be a challenge to us. Now, there comes to the fray is the brand power and the distribution reach and the credibility of the management. So, in all the 3 scores, we so far so touch wood, we have been able to pass on the cost escalation in terms of a price because we have taken a price rise very recently. So we even if we take a price rise, the business, as we have grown. So it is, but only thing, the cost push many times, because of the headwind is more, and therefore there is a limit to which you could raise a price. Because the industry itself is ailing as of now, and therefore moment, it picks up, which is not far away from now. Because how long can you be without a sanitary ware? Tell me about this, number one. How long would you like to compromise your life cycle? So one day or the other, it's a tug of war whether you want to defer your buying a house at this moment in a hope that the prices would fall, which the builders generally do not reduce. You might probably have a chance to buy the same property at the same price, which was available about a year before, so you have a time advantage. But eventually you have to decide that you are buying and it has to be need-based. Why currently the market is subdued is largely related to one that there was one, element which was an investor which used to come and park money. Now that investor has probably shrinked and therefore the demand which per se was, artificially generated or whatever the way it used to be is not there. It is purely a need-based, which is a very good welcome feature as such because these has to streamline one day, and we'll all have to fall in line. And Cera is right in the front to fall in line with that.
Fine, sir. Thank you so much, sir. Yeah.
Pleasure.
Yeah. Thank you. The next question is from the line of Prashant Botra from Antique. Please go ahead.
Sir, yeah, thanks for the opportunity. So my first question is, can you please share the segment-wise revenue breakup again? So I missed out on it.
Well, we have close to 56% coming from sanitary ware, out of which 11% is from the allied product, which comprises of PVC resistant seat covers and some of those fittings, which essentially go with the sanitary ware. So the net is about 45% sanitary ware. We have 22% coming from faucet. We have 18% coming from the tiles, and the balance 4% is wellness range of the product.
Got it, sir. Thanks a lot. So that's it.
Thank you. The next question is from the line of Ajay Thakur from Alder Capital. Please go ahead.
Hi, Bharat. This is Hemant Patel here.
Thank you, Hemant.
Hi. Just had one particular question on the sanitary ware segment. Just wanted to understand if I'm correct on this, that, if I look at the sanitary ware, whether the total, excluding the allied products, I guess the volume growth rates would have been a low single digit. So I'm just trying to understand whether is the category as such had an impact, and all the players, at least in the organized segment, growing at that particular level. And the second part within the same question is, are you seeing any new entrants actually gaining significant share vis-a-vis the larger players who are already present in this category?
Well, on a sanitary ware, to answer your first question, sanitary ware, we have grown by 11.21% in that category itself, compared to on a QQ similar figures of the Q1 of FY18. Answering your second question, yes.
Bharat, sorry, just to interrupt. I was referring to, and I'm looking at the last 3 to 4 years. Within that, the volume growth rates, I was just trying to understand that, because I believe that you're doing fairly very well in the faucets and the tiles. Just trying to understand on sanitary why...
sanitary ware also have been doing reasonably well, but then the base is larger compared to what we are in faucet and tiles, and therefore, percentage growth would always come lower than the other two products. But in an absolute amount, if you see, we have grown far more, even compared to the other products as well, because we still have about 56% coming from one single product line, that's sanitary ware. And there the growth also has been. Another thing what happens, sanitary ware generally, you would like to fix up at the finishing stage of a building. So is a faucet, and so is the tiles would come into it. And therefore, if the project life cycle has been delayed for a various reasons, that's either a RERA or a demonetization, or maybe a lot of other kind of reforms that people are trying to get into it. And therefore, the investors or a builder who probably had unsold inventory are trying to take it easy on that part. So there is no new project, and therefore the business that we would have liked that to grow far more at a higher pace has not grown. That's across. But despite this, within this kind of a macro level economy, we still have grown with about 10 or 11% in a volume and a value put together in sanitary ware itself, which is, compared to our peers, I would say we are reasonably ahead of them. Now, coming to yours, is that the first question I have answered you? Then I go to the second one.
So is the category growing at somewhere around 10% as a whole for the organized players? I mean, would that be correct to say that?
I would reserve here because, when you talk about organized players, there are 4 or 5 major players. And when you take one organized player, let's say, who is very late entrant, he had a low base, and therefore, I'm talking, let's say, name Qtr1, for example.
Okay.
Now, they had a low base, and therefore, even if they have about 100 or 200 or 300 crores business, probably their percentage would have been far more higher than what we are when you compare to a base that we have a much higher base, therefore. But when you compare to the other player of, let's say, HSL or a Perriware, probably, we have outpaced them. Or at least we have never lagged behind on those kind of a thing. This is the way I would react to your question. Is that the way you wanted me to answer you, or is that anything else you wanted to do?
I mean, that's perfect. And have any new entrants, and I believe certain players like Somani and others have actually, there are a few other players who have been entering in the market. Have they been able to create...
Honestly, we are not bothered about Somani, neither we are bothered about HSL or a Perriware. Even if, is slightly a cause of concern, if there be anything, is Jaguar. But today, the positioning, we both enjoy is very different. They have always entered into a premium position. they have not gone to a position where we are a value for money or a kind of a premium category where we are. We do compete, but then, that equilibrium is at much higher point, and therefore we do not really clash. But yes, it's a cause of a concern that, yes, if tomorrow what happens, if Jaguar decides to go down below into a lower product, it's a very strong brand, what happens to us. But equally we are strong, and therefore what we have done is, we brought in a senator very rightly at a very appropriate time. And if you really look at it, Hemant, as a product, I'm pretty sure you'll be tempted to buy next day renovative bathroom. They're excellent product with a design combination, and at a price that we are offering, is very, very competitive. So we have a lot of hopes on Senator that picking up, and that's exactly what the dealer distributors have responded to us very, very positively on this. So we feel that we have enough strengths in terms of our designing capabilities, in terms of bringing out the best of the designs in the product category, where we can compete and take on this kind of a competition which would happen. But yes, it's competition, yes. But if the market increases in terms of the size and the enlargement, every player has a room to grow.
Agreed. Fair enough. And just one final question. When I look at the dealer network for your sanitary wares, can you give us some sense of how that has been actually, whether it's depth or breadth that you're trying to increase?
We have been trying to increase, across the country, and, we have more than about 18,000 touch points, retail touch points as of now, which if you ask me questions about a year back, we were hovering around 15,000, and now there has been increase. Not only that, if you see our figures, the dealers' deposits, which is appearing in the balance sheet, also has gone on a rise, which itself is a testimony that, yes, our dealers' network is on an increase.
Thanks a lot, sir. Wish you all the best.
Thank you very much, Aman.
Thank you. The next question is from the line of Sonia Lalwani from Purnartha Investments. Please go ahead.
Hi, sir. So just three small questions I had. First is the price hike. Have you taken any price hike during this quarter?
Yeah, we have taken a price rise, we have taken across the product, anything between 2% to 4.5%, depending upon the territory, the product category. So is just to, to help offsetting our cost escalation to a certain extent.
Okay. And the second question was on the Witches China. So could you just tell me what is the Witches China as a part of your COGS, as a percentage of COGS?
Come again, I'm not able to comprehend your question. Come again, please.
So Witches China, which is a raw material for you, can I know how much is it the percentage of COGS?
No, you're talking about the China clay as a raw material?
Yeah.
Well, China clay is clay. Basically it is a clay. China clay is, you get equivalent clays here also. Now that as a percentage to our sales cost is too small. It's hardly about 11%.
11. So Witches China is another element which is used for glazing and then something like that. So is it...
That is what is a zirconium you are saying. That element that you are talking is not a whitening clay, but it is a zirconium, which is a completely imported product.
Okay.
Which is largely required in the tiles industry with a very high proportion of a cost. In sanitary ware also we do use that part, but the proportion of a zirconium that we use is not that large.
Okay. So what would be the proportion, sir?
Proportion for zirconium is fraction, is not. But yes, it's a very expensive material.
Okay. So third question, just wanted to know whether you want to, continue the same product mix going forward, or do you think you want to change your product mix going forward, like sanitary ware?
Well, currently, we feel very confident about that the kind of a product that we are into. It has a product life cycle of at least beyond 10 to 15 years, number one. So we are pretty confident. But we are in a business, we are entrepreneurs. So we always keep our eyes and ears open in terms of scouting a new product line. If you have any other product, you can suggest us. We can always put it forward to the management that, Sonia suggested this. But that, it has to have a product life cycle, distribution channel, the competition. A lot of things goes before management considers those kind of a product to be added into that part, and what is the kind of a contribution to the top line it can bring into it. But yes, your question is a very valid question. So we have started now looking beyond the bathroom now. We are anyway out of the bathroom with two products. One is the tiles and we have a kitchen sink. But yes, management is very seriously considering to really get out of a bathroom, keeping our a strong foothold in a bathroom, but also start to look into what else can we do in a home. So this is still on a drawing board level, and we have not come to any freezing point. And a time to come when they decide, the board approves, we'll roll out that.
Okay, sir. Okay, thank you, sir. That's helpful. Thank you.
Pleasure.
Thank you. The next question is from the line of Shrenik Bachawat from JM Financial. Please go ahead.
Yeah, sir, actually here again, just a follow-up. You said Anjani Tile converted its tiles to now PVT, GVT from soluble salt. So I just wanted to know what was the capex for that, how easy or difficult it is, and is it the case that even Morbi players, other guys have also tried to do, and that's why the pricing pressure in GVT?
Look, there are two ways you could look at it. One is in isolation of what Morbi is doing. Let's really focus on what Anjani Tiles we are doing it. We personally feel now we have come to a conclusion that, soluble salt is an entry level. And it's an economic range, it's a commodity, and therefore, brand power does not really come into the fray to give you better margins.
Right.
So at an entry level where, you are a late entrant, you want to enter into it, in terms of a spread, it was, to that extent, it has served a purpose. But if you really want to turn out a company which has to really, give you a reasonable rate of return on your investment, you need to change a product mix where you could command a price. Now, you can command a price only when you start manufacturing a premium range.
Correct.
And therefore, we need to really have taken a thought about it. How do we really modify our plant? The plant was capable only for manufacturing soluble salt. So we had to upgrade the technology. So we have invested about 8 to 10 crores further into that part. Both the partners have done that. So our share is 51%, the other partner is 49%. So now that having upgraded that, currently we are having about 35% GVT that we are, and we want to really reverse this ratio to 65% GVT and 35% only for an STT. If the market really, picks up and supports us, and in a year down the line, or maybe 2 years down the line, the ratio would be at 90 to 10. 90% will be GVT and PVT.
Got it. And secondly, with respect to the price increase you mentioned, when was it taken, sir?
It was taken about, just after that April, we had taken that part.
So that's...
but what happens here generally that, whatever the orders which have been placed, it becomes effective only from 1st of July, generally. Because, there are orders in pipeline with an old price. So Q1, you will not have that kind of an impact on that part.
Perfect. Okay, that's what...
You will have a Q2 which will have a little more impact with the price that we have taken on this.
Understood. And just a clarification on the power and fuel cost. You said around 0.8% impact on power and fuel cost as a percentage of revenue. Did you mention from a fourth quarter to first quarter perspective, or was it...
No, I just only said on Q to Q basis. Okay,
that is fourth quarter to first quarter, right, sir?
No, I said Q1 of FY18 and Q1 of YOY.
Okay.
Year-on-year basis, yeah, YOY.
And in terms of the last question is, in terms of the Senator brand, how do you look at the contribution, let's say, over next 3 years perspective?
Well, we are pretty hopeful on this, and we are very bullish on that product and that brand itself. Because for a very long time we were, debating, do we need a second brand or are we comfortable with the brand Cera only? And we had divided opinions on this, because brand Cera is so strong, even if you try to bring out a brand and you spend a lot of money in promoting that, because we have seen our peers and our competitors doing that kind of a thing, with coming out several brands and spend a huge amount, and that brand or that product is not able to contribute that kind of a revenue. So it was always, we were walking on a, edge of a sword. So that decision has taken now more positively because the current time scenario demands that we need to have a brand. if you really want to upgrade ourselves, Cera per se has certain limitations where people would pursue Cera as, like, when you upgrade a car from a Maruti, if you go within the same category of a Maruti, even Maruti missed out an extra, for example.
Right.
And therefore, same analogy if I apply, I'm still not talking about what Honda and what Toyota or maybe what BMW would come into the fray, but, next is the first step. So you could relate our efforts in terms of bringing out, niching out a sanitary in that category.
Correct. But do we have any target like 10, 15, 20% of revenue next 2 years would come from Senator brand or? Well,
we are still working out the response on these, and it will be too early to really give you any indicative figure as well. You might really wait for about a couple of more quarters, and maybe when we meet again, the questions will have more relevance from a time perspective. As of now, even if I tell you, it will be a figure that personally that we feel about it, but no, there has to be substantiation in terms of the market response. So let's wait for about a couple of more quarters.
And what's the status of this launch? Has it been already launched?
It has been launched long back. It was launched, in even the previous accounting year in March itself. And then we started rolling it out but it's completely outsourced. And, we are now trying to develop capability to manufacture in-house even that category as well. But it's outsourced from China as of now from our settled outsourced partners.
Right.
And, they have been able to offer us a wide range of design options, attractive design options because of their inherent capabilities that they've developed for so many years. So we are taking the advantage of that to penetrate through a market, then gradually we'll import substitute them. We'll have a cost advantage there as well. So this is a process which may take about a year, 2 years down the line. But we are pretty bullish on that, and therefore we feel that, yes, sanitary is one on which we can ride high.
Got it. Sir, you gave the product revenue mix in terms of sanitaryware, faucet and all. Can you give me for the same quarter last year? Because what we have is based on the earlier presentation. If you could help from comparative purpose.
Yeah, I can give you that. We had 58% from sanitaryware, and out of that 12% was allied products of 46%.
Right.
Faucet was 21% and tiles was 19%.
Got it. Great, sir. Thank you so much. Wish you all the very best.
Thank you. Pleasure.
Thank you. Ladies and gentlemen, we take the last question from the line of Omkar Kulkarni, an individual investor. Please go ahead.
Yeah. Hello, sir.
Yeah.
Yeah, my question was regarding whether you would sacrifice the margin for your sales would push up your sales and sacrifice the margin?
Look, this is a very very strategic question that you put it forward, and there are no thumb rules to answer in terms of a perpetuality. You see, in an anxiety to chase a growth, we would never like to compromise our margin. And had we been able to do it, had we been wedded to that philosophy, we would have grown more with a larger working capital cycle, but then we did not. Margin has to be there. In an anxiety to chase growth, we are not the one. But then at the same time, there is a dynamic situation where we are not, willing to lose our strong foothold in a product market where competition is offering a huge discount. And therefore, you need to fall in line with those temporary dynamics which affect your business. So as I said, there are no thumb rule or a perpetual answer only that is the answer. No, we change the strategies.
Okay, so currently, is that what is happening or it is not happening like that?
See, currently, we want to really have a growth about 15-18%, which is a reasonable growth, number one. And, we would like to maintain a reasonable margin. But, you have seen our CAGR about 5 years, we had grown to about 35% with hefty margin in a good market time. So what is necessary is that, your visibility of a brand, your product availability, the reach, the quality of the product, the customer recall. Now, all these kind of things are very important for a product to really sustain. And therefore, a price should never become a barrier that, okay, you are good, but then you are outpriced. And therefore, we don't really entertain you in terms of a business. No. Therefore, we need to be compromising on a certain things, but there's a limit to which you could compromise.
Yeah, so you would like to strike a balance between both of them.
Exactly.
Okay. And the last question would be from last, say, 4, 5, 6 quarters, mentioning the market has been subdued. But is there any green shoots which you can see, like from dealers, from whether it is reviving?
Well, this has been on a revival, and therefore, we are able to sustain a growth about 15-18% compared to our peers who have been doing a growth. Hello? You're not audible to me now. Are you there?
Right.
Hello? Hello?
Right. I can hear you, yeah.
You can hear me, right? So, there is, the growth is always there, but, at what cost you would like to grow?
Yeah.
So we feel that we've been able to strike a balance, which is between the margin and that's.
Yeah, my question was more to do with the margin. From the margin front, I was asking.
Margin front, margin is under pressure, which I have been saying right from day one. And, margin would remain under pressure till the market really revives as a pull market rather than a push market.
Okay, so that's what I was asking. Where do you see the situation currently?
Well, as of now, there have been feelers coming that yes, the builders are, the CREDI reports, if you see, which is a All India Builders Association, they have been saying, there are a lot of projects they are now registering, which means that yes, there is a movement on this.
Okay, so you will be hopeful within a year it should improve, like.
Well, I'm not able to commit you a time, but yes, it can happen in 6 months, it can happen in 1 year, it can happen in 15 months from now, but yes, we are positive about this.
Okay, so whenever that happens, Cera would be in the best position to conquer that.
We are very confident about this, yes, we are very confident.
Okay, thank you.
Pleasure.
Thank you.
Hello. Yeah, Bharat Bhai.
Yes, Kamlesh Bhai.
Kamlesh, here, just one point I wanted to check. When this new JV which we are proposing at Morbi will start?
Well, we have already taken a board approval now. We are already signing an agreement with them, and therefore this will start in next quarter, after 1 quarter now.
So manufacturing also will start? Or is it?
It will start, yes. It will deliver, you see, anyway, we are buying from the sister concern, associate concern from them. So, business is never suffered. Right. Question here is, we need to really have a quality and the production under our control to really meet our sales plans.
So, no, what I'm asking is that if this is a new plant, then it will take some time to get the manufacturing.
About 3 to 4 months.
Okay.
But they're already onto that part, yes.
And second JV also, are you looking at that finalizing by this year end?
Well, we should be able to do that, next 6 months, yes. In fact, it can come any time, but then, we are not able to find a right partner. At the moment, we have identified several. So, once, we feel that, okay, they are the right partner for us, we'll get into that.
And that will be primarily into high value add, bigger size tiles of PVD GVT?
That is, one is currently for the PVD GVT, and the second would be for wall tiles.
Okay. So, the one which is finalized is for PVD GVT?
That's right.
Okay. Fine. Great, sir. So, thanks, sir, for the very detailed discussion we had, and thanks, everyone, for joining for the call. Any closing remarks you want to make, sir?
No, well, thank you very much, and we feel that we have answered every question that they have raised to their satisfaction. And even if anyone has any further questions, they can always route me through my telephone, my mobile number, or my email IDs are also available. I'm available at Bharat Modi, Cera-India.com, and my mobile number is also 98980-46584. And the entire transcript that we have now would be available on Cera's website, so anybody who has missed out anything can always log in and listen again and can come back to any question that they have. We'll be too glad to answer them. But it was a pleasure talking to you all. Thank you very much. Thank you so much. Thank you, Kamlesh Bhai, to you as a special thanks for organizing this. Thank you very much.
Thank you, sir. Yeah.